Important questions. Should they hold UNH or sell? Well, we're not financial advisors, Seda, so we cannot tell you what to do. We can give you our opinions on UNH. There's actually a fancy levered ticker you can trade UNH on now too. You guys heard of that, Jack and Kane?
Which one?
It's I think it's UNHG. Is that the one? UNHG. Yeah.
Yeah.
Yeah, lever 2x long UNH daily ETF.
That's like brand spanking new, huh? I
Yeah,
get
it launched on Tuesday.
3 days of data on
Yeah.
it.
So
So
many new products that Wall
I know.
Street is coming out with that are based around one stock, double leverage, triple leverage. It's crazy.
I know. Why even trade options anymore? You can just do these 2x leverage shares, man.
That's exactly what Jeffrey Turnmeyer was talking about,
Yeah.
right? These leverage shares, you don't have to worry about time decay, delta, gamma. Oh my God, you ought to see these turkeys up here at the cabin.
Oh yeah? You got some wild ones?
Babies, 5 babies. Yeah.
Oh, nice.
Yeah, man, it's wild. Uh, so yeah, a lot of unique products coming out in the ETF space around options and getting paid. Even now, there's some weekly payout ETFs, right? So many surrounding the individual stock. And Kane, I wanted to ask you and Alex this. Now, I've noticed last month or so that a normal 2% move in the stock is no longer moving the option, right? I don't know if you've seen that. I've seen that in Nvidia, where normally if it moves 2%, that I got a debit spread that's going to move good. Hasn't been happening. I've been seeing some of these options priced out so high that it takes more than a normal, what used to be the normal move, takes almost double that now to get that option moving. And you think that's because they're pricing in all the stuff into the price of the call and the put, taking out all the juice, or what do you think of that?
Kane, you know more about that than I.
Yeah, well, I definitely have noticed that. So basically, we're saying that we're becoming less price sensitive, right? So what are we sensitive to? I think right now, if you're talking about a debit spread, you're most sensitive to that time component. So it's going to take if you are the further away you are from expiration, the more of a price movement it takes anyways. But then if you've got the market makers pricing that in, then it's going to take a whole bunch to move that to that spread. So you're probably going to hang on to it a lot longer than you might otherwise if unless you're in the habit of holding it all the way to expiration.
It's really hard to find a mispriced option, or even something that doesn't require a mammoth move anymore, which is great for the sell side, right? If you're selling
Yep.
options, this is pure heaven. I mean, make hay while the sun shines. But
Well,
if
we're going to be talking about that in a second. The premium, some pretty good premium
yeah.
stocks.
All right, so I'm way ahead. Let's back it up. Let's start off.
Let's back it up to the start before we get started. Disclaimer: we are not financial advisors. Content presented today is for educational purposes only and merely cite our own personal opinions. In order to make the best financial decision that suits your own needs, you must conduct own research, seek the advice of a licensed financial advisor if necessary. Know all investments involve some form of risk, and there is no guarantee you will be successful in making, saving, or investing money. Nor is there any guarantee you won't experience a loss when investing. Always remember to make smart decisions and, of course, do your own research, folks. Um, so we got a lot of topics for both of y'all today. Jack, I know you're a Tesla fiend.
Not the stock though.
That's not the stock. Well, I wouldn't be. This is bad. I
Good.
mean, they're not doing great, are they? I don't.
This is
Uh,
one, this is one of the best things that could have happened to Tesla. On Tuesday, I was saying that they were going to disappoint. Even if they came out with great numbers, people were not going to be happy, and they're not, right? A big 8% drop, but man, oh man, does this set up some great trades? This is why I don't trade the stock, but the options are amazing. And so right now, this is a great time to trade it.
yeah, and we were talking about this just this kind of Kane 295 300 level. It really just did just bounce off of that. We were talking about that yesterday.
Yep.
Um, I guess it remains to be seen. Will it rally from here? Will it just bounce around? Obviously, Jack, you don't care because there's a way to trade it either way. We're going to get into that later as well. But
Yeah.
Yeah, it
um,
was funny, like, because we were just saying that with the leveraged ETFs, why do you even need the options? Well, this is why, because you wouldn't want to follow that leveraged ETF into this, but you have some great option strategies that you could still trade this with.
Yep. Yeah. There's the levered ETFs are directional bets, really, right? There's not, you can't do Condor, you can't do any like, more there's not as much variety of option of things you can win on with these leverage ETFs. They really depend on if the stock's going up or down. Can't do condors or anything, or like butterflies or any stuff like that. With TSL, something like TSLL. Of course, you could have shorted it. Well, I don't know what the short ticker is for Tesla, but you could have shorted it. Run that ticker. But yeah, I mean, do we keep on going down from here? Do we retrace to 270? What do you think, Jack?
Well, anytime you got a stock that gaps down like that, if this was just sliding down, that'd be one thing. But this gap down, this sets it up for a whole another type of wiggle, little wiggle higher, maybe then down.
Yeah, fill that gap a little bit.
Yeah, we'll see. Let's see how many haters really come out. I always think with Tesla, there's a lot of people that regret owning it and they want to see it pop so they can get out. They don't want to be in it long term. And that's still going to be the same thing now, especially that it's dropped. A lot of people had bets that this was going to pop to the upside. Tons of call buying.
Really?
Oh wow, yeah, everything, and it didn't work.
I
So,
don't understand why that.
it's also a heavily shorted stock, so it's going to see a lot of action. That gap plus the news is going to really ignite some volatility in it, which again is why I just love the options. I could care less if it goes to 100 or 1,000, but the options are as crazy as they're often the most traded option, even when Tesla's not the most traded stock. So they got so much firepower in them. That's the thing I love about Tesla.
Yeah, and is it just like Tesla's underlying volatility to get that gives those like juicy premiums and I guess the volume and all open interest that just gives those really juicy premiums on it. Like, I mean, you
Story.
can go far out on strikes and still get stuff that you couldn't even dream of on other tickers.
The story behind it too, when you read the stuff he's doing, like SpaceX to fill holes in internet access around the world and being able to have all that data pumped back from the robo taxi, their conversations, what they do, everything. This one day this thing is really going to lift off, but it won't be today.
Yeah. Yeah, it's the opposite today. So we also had Google continues to dominate the world. They beat earnings expectations. They raised their capex forecast.
Everything they do, they used to disappoint investors every time. Now they like it. He's talking about capex spending. People hated how much Google would announce they were spending. Right now they're like, yeah, spend more. Let's ramp it up. So
I feel like that's
it's
I
a
feel like that's kind of been the name of the game for these earnings, right? It's like who can say they're spending the most on AI, and that's who wins, you know?
Zuckerberg. But
Yeah.
that's crazy because you should be going to if Zuckerberg's going to spend 500 billion, I don't want to own that stock. I want to own the stock that's selling him the stuff that he wants to buy for 500 billion, right? That doesn't
Right.
get the headline like, oh, we're spending all this money. And you know where it's going? You know where it's going. It's all going to Nvidia.
Yeah.
I mean, you
CoreWeave.
see that thing
Us
today?
CoreWeave.
Yeah. Musk is trying to borrow 12 billion to buy as many Nvidia chips as they can. They don't have $12 billion worth of chips to sell them, right?
That's
But he's trying to float a loan for
That's
12 billion
crazy.
just to buy Nvidia chips.
It's insane. I feel like someone will give it to him.
Someone will give him the 12 billion, but he's never going to get what he wants. It just doesn't exist, right? There's just not that many cookies, right?
Yeah.
Even a thing of Pringles only has so many chips in it. I mean, there's limited production. These chips, unfortunately. So yeah, the demand is just insane, and we'll see what he does with all that. But like I say, one day I really think Tesla's going to lift off, but it'll be a while. He's tying it all together. He's got so many strings tying together. it's really going to be something when he's done.
Yeah, like as I think Jeffrey was talking about that on Tuesday. It's the story, everything's going to be connected hypothetically, the AI, the cars, the satellites. Hey, if it's true, it's very science fiction, so could be big. I mean, but talking about where Tesla's, I mean, Google's, surprisingly, one of the few tech giants off of the all-time highs. I think we still have some room to run on Google. I mean, a little bit of sell-off post earnings, but still, still solidly above the moving averages. I could see us hitting all-time highs. Which would be right about 208 to 208, 209 or so. Dude, Google like doesn't even like. I mean, look how long it's been since they've had a bad earnings report. Since 2022. It's crazy.
Yeah, but even when they had good ones, investors just don't like it, no matter what they say.
It's about like who can like hype it up. Like I think like Andy Jassy is pretty bad hype man. Like up until now, he's the Amazon CEO for everybody who doesn't know that, but up until Elon's obviously a great hype man, right? It's like who can talk up the future of the stock. Jensen is amazing on Nvidia's front, but yeah, it depends on it's like marketing, right? How you marketing the results.
The jockey, not
Yeah.
right.
Yeah. And then we had another one, which is not that interesting, only that it was completely almost different than Delta was American Airlines report. American Airlines is really bad though, so I'm not quite surprised. I mean, I don't know anybody who likes flying American Airlines. So I think Delta posted really good revenue, really good earnings. I think maybe I mean I did think that all the airlines were going to follow suit, but yeah, Delta beat. So, but yeah, United Americans. What do you guys fly?
I fly whatever whatever I can get a ticket on. Usually it's United or American. Yeah.
Yeah, I know it's usually American for me, but every time I do like a Delta or something United, I'm like, "Oh, this is much better."
Yeah.
As little as possible.
Yeah.
What I fly.
So I wanted to so I think so we're basically today, yeah, I wanted to get into this is the day for the this week's, premium stocks. I want to run these by you guys. I also want to run by a strategy I was thinking through and to get your both of y'all's input on it. And see if it's could be viable. But yeah, so this week's premium stocks, right? GE, Amazon, and ASML, which talking about chip companies, right, is a ASML. I feel like I feel like it has some, a lot of good things happening with ASML. I'm just gonna go ahead and see what you guys think about this. If you have any opinions at all, if it's on your watch list, where's my screen share here?
First two look pretty good. ASML, I don't know, it dropped on positive earnings as a chip stock, and then you see it. If you put that next to Nvidia, there's there's no contest. So I mean, do I want to sell premium on ASML, or would I want to sell premium on something that's moving like Nvidia? I personally would pick Nvidia or even Taiwan Semiconductor. Both of those look great. But
Yeah.
I don't know about you, Jack.
I bailed on this one. They had a very unique processing component to what they do in their business, and I just don't
Yeah.
got that edge or people care about it. I don't know what's happened, but the tide has turned against this. Yeah, I had a lot of it, traded it. I haven't even looked at it in about a year. So
It's weird though because they have like I mean they're all the only company that can do like the lithography
right.
chip fab that they can do. They're the only one. And you would think that there'd be a good choke point for that, right?
I did, and in innovation, I think they're lacking in that. I don't know what the story is. Plus, it's not an American company, so I don't really even have faith in any of the accounting if it doesn't happen here. And the story, foreign stocks, not my thing.
Yeah. That's fair. The premiums are like and just to briefly cover them. I mean, you know, six where are we at? 723. I mean, you can go just next week, 695. Um and you can is that true? Is this ASML? Wow. Yeah, 695. You can get $310 in premium. Uh, that almost seems like too good to be true.
Yeah, be careful.
Yeah. This is what I'm looking at. So yeah, I mean, you could just next week. Um, but yeah, I mean, it could. We do have this trend line. It could bounce down. We are post earnings, and it did tumble after earnings. So and it beat earnings. So I don't know. Maybe it has, but be more conservative. You can still go down 675. You could get. I mean, this was right around the consolidation support zone here, 670, 675. Um, just next week too. It's like, do you think it's going to drop that down by next week? You still get $100 in premium on this play. And you go a little, if you want it to be more aggressive, I mean, you could get 300s to 400s. But yeah, so that one, and then GE, which I thought had pretty good premium when I was looking at it, to go out to 15th of August. First, let's look at the price for GE.
I always look at the trend just to
Right.
I never look at the chain until I look at the
Well,
six.
that's the trend on GE is pretty incredible.
It's not
Yeah.
sustainable.
I think
You
to
wouldn't,
Jack's point, it's like one of the questions is, do I want to own this stock, right? So yeah, so ASML, yeah, if it drops to 675, it's unlikely, but if it happens, do I want to own that stock? For me, the answer would be no. GE, maybe,
230.
yeah, depends on the price, what strike you pick.
Yeah. I mean, these companies, it's just they've soared. It's pretty wild to watch
I know.
the last 6 months, no, 3 months, especially these defense tech companies, Kratos, GE. Um, yeah. So I mean, Jack, you're looking at this and you're thinking maybe maybe a little bit hot.
Yeah, maybe a little bit hot. If I owned something like that, I'd be at the around 210, I'd be looking to take a profit in it right now. It's
Yeah.
a little lofty.
Yeah.
Needs a little cooling off period, as they say. But might keep running. It's just not on my radar. It's not something I've ever traded.
Yeah, I don't think a lot of people like necessarily like GE is not it's not never been a super like exciting stock for like, traders particularly.
GE runs though, like if it when it trends, it really trends. Like if you look back in 2024 and 2023, the way that it was trending, it was incredible back then.
Yeah.
Yeah, I know. Scary even. Weird.
Yeah. And now we're here. A little bit of consolidation for about, couple 6 months. Got a little bit, then really hit it high. Man,
Pull up, pull up AVGO.
Broadcom.
Yeah. Full transparency. I'm long.
I mean, good trend. You want me to look at the
Yeah,
premium?
Yeah, I've been doing credit spreads on this thing till the cows come home. And it's been, knock on wood, it's been unbelievable.
Yeah, I mean, you could go down. If you do a if you do a put spread, I mean, decent. You could go pretty conservative at like 272 um for put spreads on the like next week at $50. Um,
Yeah.
which is where you can go more aggressive and get. I mean, yeah, these premiums are pretty dope, honestly. Is
Yeah, they're not bad. So I sold the 260, 250 and bought the 260.
that the month out?
Now that's tomorrow.
Oh, tomorrow.
So that's,
nice.
yeah, I got 7.2% in 3 days.
Yeah, that's
Wow.
great.
Yeah. Yeah, I do that every week. It's one of my favorite trades. And I go back to the well. So as long as that stock is continuing to trend, I keep doing it. Last week we got about 12% in 3 days on AVGO. This week only 7%. But it's just been amazing for credit spreads.
Yeah, I mean, just goes up. Same as Hood. I mean, there's these like market leaders who have just, I guess Hood's finally maybe reaching
Hood
the
gets a little more press though. The crazy thing about AVGO is it doesn't get any good PR, and it
right.
doesn't trade billions of shares every day. It's only trading six million right now. Um, yeah, it doesn't get the news that the others get, but this is kind of the glue that holds the stuff together. So I'm long probably too much of it, but we'll see how it plays out.
Yeah.
Coyote says I'm with you on AVGO, Jack, every week. I know Coyote's doing great.
Nice. One of your customers.
I think he's a lot of our customers now.
Yeah,
He's
he trades.
done
He has
so,
a few of my services too, I think.
he's done so great. I'm so proud of this guy,
That's
Uh,
awesome.
love to have an interview. One of us should have an interview with him. He's one of those guys that, you teach it to him and then he goes off and flies the nest and does the strategy on his own and reports back and tells you he's doing it on stocks I never even dreamed of doing it. I love hearing that, right? Teach a man to fish or give a man a fish, you feed him for the day, teach a man to fish, you feed him for a lifetime. This guy knows what's going on.
Yeah, I love
Absolutely.
hearing that. I love
He's
it. I
had
love
some.
it when people run with the knowledge. Yeah.
Don't you? Yeah, love
Yeah,
it.
he's had some big winners. I forget Jody, which services of mine you've had some big winners on, but
Yeah, he's good.
maybe Wave. I think you've been using the Wave indicator, I think, which is just an indicator that you have to kind of use on your own. Um, so yeah, congrats, Jody. Everybody say congrats, Jody. The next, so another one is Amazon. Again, we're coming up on earnings. It's probably not a good time to do anything, but again, it is just like Google, off of all-time highs, sort of lagging the rest of the Mag 7 in the recent run up. Uh, my question to you guys, right, is what price would you be willing to own Amazon right now? At 232? Less?
I would less. I would definitely need a pullback before I was interested in Amazon.
Yeah, me too. I already own it in full disclosure.
Yeah.
I'd be more of a seller up here. Maybe, again, you see that gap right there? Go back a
Yeah,
little.
with that like two, no,
Right there.
190-ish, 195. Yep.
Yeah, that disrupts so much of the foundation of the trend.
Yeah.
It is like a crack in it. So we'll see. The story here is great. A lot of big time players. I don't know if it's Bill Ackman or who it was, but just like this is one of his two biggest positions. I think it's okay, but it's really still tied to retail, and that's highly competitive. They got a lot of bot stuff going on, a lot of automation.
Robots.
But, yeah, I wouldn't buy it here. I already own it lower, and I'm cool with it.
What about in the chat, folks? Would you buy it here? Do you agree with Jack and Kane? You want to pull back on Amazon? Let us know. I was looking at the premiums for this. Of course, predicated on if you want to own it. But so
Michael says he would buy.
Michael, you'd buy it. So premiums you can get $100 at 210 if you go out to the eighth, which is not super spectacular. Go out to the 15th, you get a little more. Go out, about what, 3 weeks? Yeah, 3 weeks, get a little more. If you want to get more aggressive, you can start getting into the high 100s, low 200s. But that 210 is that gap up, right? So yeah, that's where the whole kind of trend, though it did dip down, I suppose, but that is when the crossover basically happened. The trend kind of started there. So I don't know. Maybe that's an interesting level to start plumbing and seeing if there's anything there for you traders.
Are you talking about a naked put here, Alex?
Uh Yeah, naked put. And oh, you know what? Let me actually run this strategy by you. So I was working on this. So my idea was basically this might be completely insane. So trying to make basically $0 options. All right. So selling a naked put on a stock and using the premium that you're receiving to buy a vertical call spread, so credit debit spread, vertical debit spread, and basically you use the premium to fund the debit. And if it goes up, right, you would win both ways. If it slightly stays, you would still win on the premium plus maybe a little bit of appreciation on the debit. The problem though would be if it goes down, you would lose on the debit and the premium. But if you do get put on those shares, you could potentially sell it, with the premium differential for a little bit of a profit. Does that make sense?
Yeah,
I
it makes
would
sense to me. You're
make sense,
go.
but
Yeah.
I would.
What do you think?
I'll let Jack go ahead and tell us what you think, Jack.
Yeah,
I wouldn't do it
exploring.
myself. I wouldn't do it.
Yeah.
I wouldn't do it. I just don't think there's enough juice in it. What could you make on the debit spread? You'd have to figure out what your yield is first on the naked put and if you did it on margin or not.
Uh-huh.
A lot of variables in there. But the debit spread, for me, it has to have an unbelievably compelling setup. Not just something I would just go randomly do in addition to a naked put. But it might work. That's just my thought on it. What do you think, Kane?
Yeah, so the ideas of a trade, the eventually, basically you're legging into a spread that you're hoping that eventually is a risk-free spread. Basically, you
Right.
can't lose at that point because you've locked in a portion of the profits that covers your original capital. So that idea is appealing if you could then repeatedly do it over and over again, because otherwise, your possibility of just making zero on the trade, then it's not that great. But if I can do it over, if I can use that capital and go into another trade and another trade and another trade over and over again, then I have got really efficient use of my capital. When you're doing a debit spread like that, you're probably only going one strike apart, so your profit potential is low. But
Hmm.
in order to make up for that, if you can stack 5 or 10 of them, then it becomes really appealing. So what you'd have to see is how easy is it for me to get into that other leg? And basically, you would do your calculation, how much premium did I collect? And then how much more does the price have to move in order for me to pay only that much for the next strike up? And then, so once you have that price, how much the price has to move, then you say, can Amazon actually move that much? So maybe you compare it to something like Amazon's ATR and say, oh, okay, this could happen within a couple of days. So I'm at risk for a couple of days. Maybe if it works out for me, I'm at risk for a couple of days, and then I'm no longer at risk. Or after a couple of days, it hasn't worked out for me yet, so I just cut my losses and I run.
Right. Interesting. Okay. Yeah, I'll start. I just think about it this morning. I was like, huh, this sounds like interesting. So glad I had you guys both on. So Kane, you want to get into your gamma watch list? Some of the stocks you're watching.
Sure, I didn't run it for today, but I can show you gamma on the indices. I can
Do
definitely
it.
do that.
Do
So let
it.
me share my screen.
And then we have some stuff to talk about volatility, I think you were going to cover as well.
Yeah, I can do it real quick on volatility because that will affect what we're talking about over here in gamma. So right here we're looking at the SPY gamma. 636 has had the most amount of gamma basically all morning. Where are we trading right now?
Let's tell the folks at home what is gamma.
Yeah, okay, that's that's a good idea. So gamma is, so if you guys know about the options Greeks, most people talk about delta, and gamma is one of the ones that just tends to fall through the cracks. But gamma is the rate of change of the delta. So if I move a dollar, delta is supposed to tell me how much my option moves. But then gamma will tell me after that dollar move, how much does delta change? Because it's not going to be the same anymore. If your underlying moves a dollar, then what was the at the money, it is no longer at the money. So it was 50 delta, and now it's no longer 50 delta because it's no longer at the money. I think that's probably the easiest way to think about it. So gamma tells you how quickly does that delta change. And for a manager of options portfolios, they will pay attention to gamma because you're probably not just interested in a $1 move. Like what if it moves $10? What if I'm looking at AVGO, which is, what was that, like a $600 stock? Or
Yeah.
$200 stock? It's probably, I probably don't care about a $1 move because that's nothing, that's peanuts to it. But I would care about a $10 move. I would care about a $15 move. So gamma is going to be a lot more important to me as a manager of options portfolios than delta is. So gamma and my risk at gamma because of gamma is what is going to tell me what I need to hedge in terms of delta in order to keep my portfolio, depending on what I want to do. Do I want to keep it delta neutral, or do I want to lean it just slightly delta? Because if I'm stacking, let's say we went into Hood, we went to AVGO, we went to 5 other positions, and I was long all of them. Well, that's too much risk in one direction. My delta risk is going to be huge. So I would want to hedge away at least some of it. That way, if the market goes really against me, then I'm not hurt too badly. Okay, so gamma exposure specifically tells you for the market maker, in this case, the market maker of SPY, how much do they have in terms of risk at specific price levels. And another way of saying that is, if we get to this price level, how much activity, how much of the underlying SPY do they have to buy or sell in order to keep themselves neutral, hedged, properly hedged in terms of a market maker. So over here at 633, they don't have to do much. 634, they've got to do more. 635, they got to do even more. 636, they got to do a whole bunch. And right now we're at 635 and a half. So right now what's happening is as that price fluctuates between 635 and 636, that market maker is buying and selling a whole bunch of shares of SPY in order to keep themselves hedged. So the market maker's volume is going to be somewhat significant in the underlying equity market right now, because as we fluctuate between those two prices, they have to keep themselves balanced. If we start going down, for example, to 634, 633, then they're going to suddenly start dumping a lot of their positions. And that would just accelerate that move. So it's good to know gamma levels, because once we hit a specific strike, the market maker's activity is going to stabilize prices at that strike. And it'll help accelerate or decelerate movement towards that strike. But at that strike, it stabilizes it. And so these levels tend to get a little bit sticky. Once they hit that level, it takes a little bit of a force to knock prices out of this level. And that's why a lot of times, if you're in my Telegram channel, you'll see me say, hey, this morning, exposure's at 636, and at the end of the day, we're within like 20 cents of that. Right? It happens a lot. It's because of that market maker hedging activity. So it's good to know these gamma levels. And then it's good to know them for individual stocks too. I think Alex has some strategies that take advantage of that, and I do as well. So
and there's an easy way for folks to eyeball it, right? Is you can go on like SPY, the option chain, 24th of July, and kind of look at the open interest levels. That's like it's not perfect, but that tends to be like a way for them to do it if they don't have.
I don't like to encourage people to do that because you can get a really skewed view. There is a free tool on bar chart where if you go to any ticker now, they have gamma exposure. That would be a better way.
Okay.
So this is obviously it's free tool, so there's only so much that you can get out of this, but you can get major levels. So if you just did today, they don't, do they have 0 DT? Yeah, they have 0 DT. Okay, so if I did that,
So we're at 635 right now on SPY.
yeah. So you can see that spike right there, 636, 635 lower, and then 634, about half of that, and then not much below that. So that matches up with my chart pretty well, right? So yeah, so that's a free tool that you can use. But again, it's a free tool. You get as much data as you get, and the quality of data as you get off of a free tool.
Right. I'm just dropping that in for everyone. Barchart.com. You can play around with. And on the left there, it'll be able to show you gamma if you just click it.
Yeah, right down here.
Do you use bar chart?
If I need to look at something really quickly, I will use bar chart, but I generally use my own software, but it's slow because to calculate all the gamma exposure, you're calculating it on every single strike on every single expiration. So if you need to do that on the fly, then it's a little slow, which is what I do because I don't have servers, I don't have like enterprise software that's collecting all the data so that you can just get it instantly. So I calculate everything on the fly.
Are you in Excel? Are you doing it in Excel?
I'm doing it in Excel as my user interface just because I'm not, I can program. I'm just not like, it's not my thing. The markets are my thing. So for me, Excel is an easy user interface rather than trying to Python and code some sort of window and all of that jazz. That's really not my area of expertise. I can do it, but I'm definitely not an expert at it.
Yeah. You gotta get using Claude, man. Those AI stuff is crazy.
Yeah, I'll have to
Yeah,
look into it. Yeah.
yeah, I'll show you this. So let me just I'll go back to you. Let me show you so I basically built this little like this iPhone app
Oh, nice.
that basically just is tracking like basically unusual options flows, but I did this with the help like you see on EWI, which is like a Korean ETF. You're basically just looking for, volume spike out of the money. Either way, call and you just look for like sequences of them. Dude, I built this in like 6 hours, man. It's crazy. Anyways,
Oh, wow.
yeah. So if you do want to build out that stuff, man, the AI is crazy.
Yeah, I'm gonna have to talk to you about that.
Yeah. But yeah, we go. So don't mean to derail the conversation on gamma though. It's very interesting. Gamma is very important. I've been spending a lot of time learning about it over the last couple of months.
Yeah, what people don't realize is that when you're looking, so this is my whole spiel, why I started looking at gamma and why I built all my own tools around gamma, is people don't realize that when we're looking at an option chain like this, you are looking at the market maker's book. Collectively, there's not more than one market maker, but if we take all the market makers for AVGO and crunch them all together and treat them as one entity, then we are looking at their collective book. And that can give you so many advantages. If you know a major player's book of positions, that there's so many things you can do with that. But not only do we know that they're their market maker. So we know that their exact business model. So we know exactly how they're going to behave because they're making markets. They're not betting on trends. They're not speculating. They're not doing any of this other stuff. They're just simply making markets. So we know who they are. We know what they do. We know exactly what they're holding. We know how they're going to behave if markets move a certain way. So they become really predictable if we know all of those things. And that's why I love the option chain. I love Gamma because Gamma tells me a lot of things like, hey, they've got to hedge themselves over here. They've got to hedge themselves over here. If the market moves over here, then we know pretty much exactly what they're going to do. So if we know exactly what they're going to do, then we can get in really early, or we can either get in before they even do it. That would be anticipating, which is not what I recommend. But as they're doing it, as we see them do it, we can jump on their coattails and go along for the ride. So gamma is one of those things that is gives you a really big advantage, but also what people don't realize now is how much the options market now affects the stock market. And it wasn't like that a few years ago. People would laugh, like I would have laughed at you. I'm sure Jack would have laughed at you if you said, "Oh, I'm going to look at the options market to see what the stock market is going to do." But now, because there's so much activity, especially just say like in Tesla, like Jack was just saying that sometimes there's not much going on in Tesla. It's not even the most active, but their options are the most active. You think that's not going to affect the stock? Especially if the volume of shares that are being controlled by the options is a significant portion, 40-50% of all the shares that are being traded that day, that's going to affect the stock. And if the market maker is hedging themselves, they're hedging themselves with the underlying. So all these guys, they've sold so many of these options, they've got to go in and play around with the underlying stock. So their market making and their hedging activity pushes around the underlying stock now. So if you ignore the options market, I think you're making a huge mistake.
Yeah. And this is a new development. My whole career since the early 80s was the underlying stock controlled the price of the option.
Yeah.
That's not the case across the board anymore. And it's a crazy phenomenon. And I think you hit the nail on the head right here.
Yeah.
Now, one thing you got to know about a market maker, what is a market maker? A market maker is somebody that uses their own capital, their firm's capital, and stands willing and able to buy at the bid and sell at the ask. That's it. They got to buy. If you call them up and you hit the, they don't call them anymore, but if you hit the bid, they're going to buy it at the bid. They got an ask price. They're going to sell it at the ask. No questions about that. So that's where their risk is, right? If they keep selling at the ask and they don't get to buy some at the bid, now they're short, right? And the stock going up, that's when they got to go in and start playing with the underlying stock. And that's what's happening. So much more call options being bought than put options. It's really skewed bad.
Yeah.
So that makes them take a position. I didn't see a lot of that cross trading, long time ago. If you were making a market in the option, you just made a market in the option. You specialist in that, you didn't mess with the stock. But now they do. And that changes everything for the way the stock behaves intraday.
Yeah, and the market maker, as Jack was just saying, is like they don't get to choose their position, right? Like I said, if you come in and you hit the bid or lift the ask, yeah, you got no choice. So suddenly, like if someone comes in and buys tens of thousands of call options, then as the market maker, you're way off sides. What can you do? The only thing you can do is hedge yourself.
And raise the price, right?
Yeah.
And raise the price of the call. That's the only thing you can do, and hope you get hit on the bid. Someone wants to sell the calls as they're moving up. It's a tough racket, man. I'm glad I don't do it. It's a young man's game. I was wearing Depends at the time. I was ready to get out of that stuff, man. The less office, no lunch, no nothing. It was.
Oh yeah.
It's you gotta put in the blood, sweat, and tears, man. That's that mountain cabin in the Rockies is the reward, right?
Yes, so yeah.
He's got to unwind from all that. I remember not leaving my desk, feeling like I couldn't go to the bathroom, pick up lunch, or anything. I remember those days. I remember guys standing in the bathroom so wound up, they're standing there for like 10 minutes before they can even go. So
Yeah. No, I know, crazy. And then any minute you're waiting for that one. We had these direct lines that, like Batman phone where you just picked up and the guy was on the other line, right? When that thing lit up red, it was like the back office or net capital problem or something, man. It was just, yeah, I even would dream about trading, making a market when I was doing that. I mean, it just it takes over your everything.
Yeah.
People, if this is going to be recorded on Financial Wars. I was record it and then post it on Financial Wars YouTube channel. One of our mods here will drop that YouTube channel for you. So definitely, go back and Kane's talked about Gamma quite a few times. So go back and read or watch some of the past ones. But Gamma, like you said, is super important. It's from it's both Jack and Kane, right? These guys were inside the belly of the beast doing this stuff. So definitely read up on any for retail traders, right? It's not just you don't have to be inside, right? It's for retail traders, you can get a little bit of an edge with this. And the question is, right, like, why don't are there any good gamma levels on Tesla? Just I know we're going to be talking a little more about Tesla in the future. I don't
Yeah,
know.
let's take a look. Oh, this tool, this interface right now only gives me by specific dates. So I can't aggregate off of this tool.
Okay.
But if you just say, but if you're only interested are you interested for a month at a time, a week at a time?
Well, Jack, you look at a month out, right? What are you interested in?
It depends. If I'm doing Tesla, like today, I would go till next Friday.
Next Friday.
So August 1st. And we'll go 5 strikes. Okay. Yeah. So it's interesting. Yeah, with right at 300, which is kind of predictable given where we dropped to today and where we bounced off of today. So that's interesting. So basically, what we see is that gamma levels, we can expect to see a reaction because the market maker is going to be doing a whole bunch of stuff. So it's not just going to be dead in the water. So usually we will react to these levels where there's giant strikes. So if we come down, it could be a bounce off of it. Or it could be a pause and pin there for a while. It's very unlikely that we're just going to skip through there. It's like, oh, we're dropping from 305, 304, 303, 302, 301, 300, 299, right? We're not just going to move right through it. There's going to be some sort of reaction right there. So either a
And what's
bounce.
the negative versus the positive imply here?
So that means that this is net. So that means the put exposure, the risk
Higher.
on the puts is higher.
Okay.
So that's going to draw it down. So we must be above. Yeah, we're probably around 305,
We are.
302.7. Yeah, so it's normal to see that negative exposure below the current market level. It doesn't have to be. We could see negative exposure above it as well, or even positive exposure below it, but this is the normal pattern. You would see negative exposure below the current market value. And this would act as a magnet, right? So, well, it already did. We already bounced off of it. So what we would want to see is, does it get pinned right there? But right now that's, let me see. Let me get back a Tesla chart. Yeah, I guess it bounced off of it and then came right back. So it's acting as a magnet at the moment. Yeah.
That's the beauty. Put magnets, call magnets. This is the beauty of gamma, folks. And so Jack, like, so with that information, how would you start thinking through a trade, right? Because I know you do have a you do have a method
This
of
is a
trading Tesla.
debit spread strategy. Yeah. So yeah, there's a little more to it. I'm going to reveal all that here momentarily, but I don't want to give away the entire formula. But we're waiting for a certain green light in the underlying stocks activity in order to do a debit spread on it, pretty much at the market type debit spread. And if we get the green light on it today at 2 o'clock, we'll have another trade. It looks like it's setting up that way, but we'll have to wait and see. But that's what the trade is. We don't force this trade every week. That's
Okay.
kind of dangerous. We added a couple of uh, things that would activate the green light, and that's taken the win rate up from around 60% to over 81%. So we don't do it every week, but when we do it, it's really a hot trade, and it looks like it might be setting up for one today. Debit spread that we're into about 10 days. And this stock, and the way these options move, a lot of times we're out of the trade the next day or a couple days later, but it's set up as for 10 days or less. And
And I love the debit spread idea. I'm just going over here to Tesla's chain.
well, I'll tell you why everybody loves it, because if you just buy a call on Tesla,
Yeah.
spend $1,400.
Yeah. Yeah.
Buy
So
it.
do you want to spend $1,400 on a stock as volatile as Tesla? Like that's
If you do a debit spread and you sell a higher strike price call, you can get that down to, instead of paying $1,400 for the trade, you're into the trade for $125 or
yeah.
$200, right? So it makes it so much more affordable, and it does cap your upside, but we're only going for 50%. I know it sounds only, but you might be capped at 200.
Only 50%.
Yeah, you might be capped on a debit spread. That's why people say they hate them. And you are, but that cap might be 200 or 300%. But we're only going for 50 in here, and we're able to hit that a lot because of the way that this trade is set up. And so I like debit spreads when I have a very compelling reason to do the trade, which is why we run a little algo rhythm on top of this to find that good advantageous time to get into that trade.